I will now introduce Corinne Pullman, our Senior Vice President, National Affairs and Partnerships at CFIB. Thank you, Corinne.
Thank you, Alexa, and thank you everyone for joining us today for this special webinar where we have some very special guests to help us walk through some of the COVID-19 relief efforts that are available for small businesses. All of these organizations are involved in delivering and providing those types of programs to small businesses. So they're each going to provide you with a bit of an overview of what that looks like. Without further ado, I wanted to introduce to you our panelists. We'll be starting with Business Development Bank of Canada, or BDC, Michel Bergeron, who was appointed Chief Strategy Officer of the Business Development Bank of Canada in 2018. He actually, in this role, he's responsible for designing, developing, and communicating BDC's overall strategic direction and vision for the future. He actually joined BDC in 1999 and held a variety of field and corporate positions during his career with the bank. Next, we'll have Glenn Millard from EDC joining us. Glenn is Vice President for the Ontario region of EDC. In this role, he's responsible for sales, distribution, and in-market representation for EDC in the province. But I suspect he'll be able to answer questions from across the country, as we know we have people from across the country joining us here today. Glenn has over 20 years of trade and export finance experience working in both Crown corporations and private companies. And thirdly, we have Laura Henry. Laura is the Regional Director of Small Business with Scotiabank. While her 30 years of banking experience has spanned both field and head office roles, she's never really strayed far from her passion for supporting and contributing to the success of Canadian businesses. In her current role, Laura works every day to inspire her team to provide best-in-class advice and solutions to Scotiabank small business customers across Ontario. So that's the panelists that we're going to have here today. Before we turn it over to them, I just wanted to give you a quick reminder, if you move to the next slide. If you don't answer your questions, you can call us as well, or any of the organizations that you see here, and that, of course, can be part of the handout that you can take with you after this webinar today. And with that, I think I'm going to turn it over to Michel Bergeron of the BDC. Michel, moving on to the next.
Thank you, Corinne, and good day, everyone, and thank you for joining us today. So what I'd like to do is provide you with a bit of advice and information on what exists right now in the marketplace to help you cope with the significant challenges posed by the COVID situation. Now, before I get into the crunch of the topic, if we move to the next slide, just to give you a bit of a context on BDC, for those of you less familiar, we currently support about 60,000 small businesses across the country. And the way we do this is by providing term financing to finance real estate, equipment purchase, or working capital. We also provide capital in the form of equity and quasi-equity, for instance, to providing significant amounts to venture capital investment in technology-based companies. And thirdly, we help Canadian SMEs by providing them advisory services to help them manage the day-to-day business operation. So moving on to the next slide, one of the things that we've observed through various surveys that we've done in the marketplace is basically COVID-19 has had a negative impact on approximately 90% of SMEs. So this has been a significant challenge, and about a third of those businesses have seen 100% drop of their revenue. So significant challenges, basically complete stoppage of the revenue. On the other hand, existing obligations have to be paid out. So this represents a significant financial stress for a lot of entrepreneurs and businesses across the country. And so what I'd like to do now is just walk you through some of the key programs that have been deployed to help you cope with the current challenge. And the first one on the next slide is what we call the CEBA program, the Canada Emergency Business Account Program. But I will leave my colleague Laura Henry from Scotia. She'll walk you through in more detail as to exactly how they are currently supporting this particular initiative. On the next slide, BDC has played a very proactive role in helping both its clients and non-clients cope with the current challenge. So from the early days of the crisis, we put out a $2 million working capital loan. So if you're a BDC client, you've been contacted most likely by your account manager. We, for instance, have now extended more than 35,000 capital postponements for 6 months to our existing clients. And also we are underwriting and providing new financing to non-BDC clients in the range of up to $2 million at very favorable interest rates and terms and conditions. So if you have not been properly served by your financial institution, you can come knock on our door. And if you're a BDC client, we'll just reach out to your account manager. The next initiative for slightly larger financing needs is something that we are deploying to the financial institution, about 18 of them across the country. And it's a co-lending program. So basically what you should do is go to your financial institution. And if in the context of an application for financing, the institution perceives that maybe the transaction risk is slightly beyond what they would normally do, the financial institutions will have the ability of transferring 80% of that risk over on the BDC balance sheet. So the objective there is to make sure that you leverage existing channels and relationships with your financial institution, but that the financial institution have the ability to extend the credit despite the risk that are involved. And the other initiative that we put out on the next slide is if you're a larger businesses, we are now deploying a new funding program for to provide financing in the range of $12.5 million to $60 million each. It's what we call a junior loan, so kind of subordinated. So these are a higher risk transaction, again, aimed at helping larger businesses that have significant working capital challenges, and we'll be working directly with the Canadian financial institutions to make sure that we split in the risk and provide the capital that those businesses need. Another initiative on the next slide is for if you are located in the remote area, the rural areas, funding has been deployed to the regional development agencies. As you see, the amount there are also to the Community Futures Development Corporation. There's about 270 of them across the country. Those organizations try to provide complementary financing. So in the event that either your FI or BDC is not able to help you, these players potentially could be helping you in the local communities. So in a nutshell, on the next slide, this is a question we often get asked, is like, where do we start? Where do we go? The initial reaction should be to go to your existing financial institution, leverage the ongoing relationship and the knowledge they have of your business. And in the event they're not able to help, then you can come knock on our door at BDC or leverage some of the other organization. And if you're a BDC client, well, you should have been in touch, or your account manager should have been in touch with you already. But don't feel free to call us if you need to. On the last point of new offering, as I mentioned, to our advisory solution, we recently deployed 3 solutions. We see a significant uptick on online sales, also in terms of continuity planning and also managing some of the health risk related. So if you are interested, come on bdc.ca. The information is provided on there. So this completes the first part in terms of the various programs. If I may, just want to share some of the trends that we've been observing in the marketplace since the onset of this crisis. And the first one, obviously, and I'm sure that many of you have either started becoming health and safety experts in the context of COVID, but this is a significant challenge for many of you, as the way you'll be operating and protecting the health and safety of your employees and clients will have to evolve. So it's an important challenge. It will require upfront investment. It will require change in some of your key processes, and unfortunately, we reduce the overall revenue that you're able to generate as a result of this. So something very important that to be done extremely appropriately in this context. The other significant trend that we're observing is the significant increase of e-commerce activity. You as individual consumers have probably experienced this, as there was no other way to consume. But this is a trend that had started before COVID, now gets accelerated because of COVID. And so we're seeing significant demand by a lot of SMEs across the country and saying, you know what, that's my only way of generating revenue. How do I go online and ultimately create a real channel? So this is something that maybe some of you have already started, but if not, this is something that adds an additional channel and a very important channel in these difficult times. The other trend that we're seeing is, and we've seen this in some of the challenges in terms of the supply chain related to PPE, but we will see some reshoring of manufacturing of certain activities and key products in the country. So this will represent an opportunity maybe for some of you, but there is, so the way supply chains have been working in the past is probably going to change dramatically over the years to come. And one of those trends that we're seeing on the next slide also at the consumer end is a lot of people wanting to buy local. So what you have on the slide is an example of a BDC client, Annie Rouleau. She's in the body care business, had a very local supply chain, local products. Now this is extremely attractive to a lot of consumers, and her sales have basically boosted 50% over the recent past. So just before I close, very practical tools that are available for free online. In these challenging times, managing cash flow is king. So if you haven't done proper cash flow planning, I do encourage you to do it. This is a simple tool. It's an Excel spreadsheet, allows you to plan the inflows and outflows and properly assess whether you have enough in the bank to go ahead in the next months. As I mentioned, in the kind of renewed context of limited productivity and the new health and safety measures, a lot of businesses will not be able to go back to the previous revenue levels they had. So you need to plan ahead for this and see what does that mean in terms of the future cash flow needs of your business. Some of the tools that we have for free online, for instance, providing some additional context and information on understanding your financial statements. The next one is how to properly control your cash flow. And finally, you can come on bdc.ca, where we have a resource center, not just in terms of BDC programs. We have a lot of free advice and also some referral tools on some of the programs I just referred to. So I'll stop here and pass it back to Corinne.
Thank you, Michel. That's greatly appreciated. I can tell you already the questions are pouring in. But before we get to any of those questions, we'll turn it over to Glenn of the Export Development Canada. Glenn.
Thanks, Corinne. Thanks. Good afternoon, everyone. And so, as mentioned, my name is Glenn. I'm the Vice President for the Ontario region at EDC. But I'm happy to take questions from across the country. I started my career 20 plus years ago in Saskatchewan, and have progressively worked my way east, and including a small stint in Quebec. So happy to answer any questions that the group may have. So these are trying times without question, and I know everyone is busy, so I appreciate you joining the call. This is just a quick slide about EDC, but if we could move to the next slide. EDC, we're here to help all Canadian companies go global. And so we do this in three very distinct ways. In over 75 years, we've learned a lot of things. And so that combined learning and experience with the active reporting and analysis that our global economics team perform, we've learned a lot, and we have a lot of information about global markets and trends on a global scale. And so we share this knowledge and intelligence and expertise through what we call our knowledge business. And so that's that top pillar, the market intelligence and the export. Our financial products, they help provide access to the capital and risk mitigation that Canadian companies need to go global safely. And finally, our connections program is kind of our last pillar. And what this pillar is about is through our international representations, our customers, the exporters we work with, and the buyers that buy from our Canadian companies, we've met a lot of people over the last 75 years. And so this last program, the connections program, does just what the name suggests. It connects all of these people together to help form global supply chains, a global buyer network. And we provide, financing and risk mitigation services throughout that whole connection stream. And so those are the three pillars that we traditionally provide our support in, and are doing so through the crisis. And during any crisis, whether it be a health-related financial crisis as we're experiencing today, a market-driven financial crisis that we had in the late 2008, 2009, our response is always the same. And that response kind of flows like this. First, we look at how can EDC support be implemented and deployed in a way that's going to have the greatest impact for the most number of companies in the quickest manner. The second thing we look at is once we identify how to get our support where needed, what gaps are left that the crisis has created or exposed, and what do our exporters need from EDC to help fill those gaps? And then third, what changes can we make to our existing lines of business that are going to help make things easier and better for our existing customers and new customers that want to take advantage of our traditional services. So in this instance, I think we can all agree that right out of the gate, it became very apparent that what was required was getting liquidity into the market as fast as possible. And so the decision was made that any of the new programs that EDC would be involved in to fill those gaps exposed to the crisis would be facilitated through our Canadian financial institution. And so there's many reasons for that. Number one, we work very closely with Canadian financial institutions through our normal course of business. In fact, outside of our insurance program, virtually every program we have is first facilitated through a partnership with a Canadian financial institution. They have the expertise, they have the relationships, and they have the infrastructure that's required for us to get the liquidity out to the market and the funds flowing as quick as possible. So with that said, what is new? So if we turn to the next slide, again, as Michelle said, the first thing that really came to light was the CEBA program. And I too am going to just, my next slide shows kind of the outline of what the CEBA program is. But our involvement here is really just in the back end as an agent for the government. And so all of the CEBA support is facilitated through the financial institutions. So we're going to let Laura talk about that, as Michelle said, as Scotiabank is one of the major deliverers of this program. Next slide, we get to the Business Credit Availability Program. And as Michelle said, there's two streams to this program. There's a co-lend option and a guarantee option. BBC is facilitating the co-lend option. EDC is delivering the guarantee. Again, very reflective of our two ways we do business, ours being more of a partnership approach where we offer guarantees to financial institutions as a regular course of business. So how does the BCAP program work? If we just go to the next slide, at a high level, the program is this. It's a guarantee of a new operating line of credit or a cash flow term loan to the bank or to the Canadian financial institution for 80% of the value of the new facility. Now, this support is to be used for operational expenses to sustain operations in response to COVID-related strains on the business. It's available, unlike in non-crisis times. This support is available to both exporting and non-exporting customers. So it's available to all Canadian companies, whether you export or not. And again, this facility is for up to $6.25 million for our small and medium-sized companies that we're looking for support. And in the coming weeks, we will be launching, just as BDC is, our mid-market program, which is $12.5 to $60 million. But again, the same parameters of 80% guarantee from us to the financial institutions. As you see at the bottom of the slide, to qualify or to get access to this programming, it is available through your qualified financial institution. We currently have 121 financial institutions approved and onboarded to be able to provide the BCAP guarantee or the business credit availability guarantee to their customers. And so if you see a fit for or a need for support in this manner, please do talk to your banker today because they all should have awareness and accessibility to the program. On to our next slide. So lastly, those are the new programs that have been introduced. There's a few other, but they're more specific and specialized. So we'll skip over those. You can ask about them or send me a note later. How did we change our existing programs to respond to the crisis? And so if we go to the first slide, I think everyone knows as Canada's export credit agency, a big part of EDC's business is our credit insurance business. And so our credit insurance program provides 90% coverage against non-payment from your buyers, okay? And so it helps to increase cash from your financial institution as these receivables are now, an instrument, a financial instrument that can be leveraged. It offers your customers more competitive payment terms. And in a case like this, it gives you an opportunity to be able to provide that flexibility with your customers to help preserve those relationships that you had prior to COVID. But also, if you, it's not, and this is something that's in the marketplace, but it's not true. We are still very much open for business on the credit insurance side. So if you do have an interest or feel that credit insurance could be something to benefit your company, please do reach out to an EDC account manager, or there's numbers at the end of this presentation for you to reach out. Special conditions within the COVID scenario is covered losses for goods shipped even if the buyer has not accepted the goods, which is something new that we've introduced. Waive of the 60-day waiting period for claims. So if you have a buyer that hasn't paid you, Traditionally, there's a waiting period that you have to wait before you can file a claim. We've waived that. You can put the claim in immediately. We've enhanced our credit appetite. We know that receivables have been sitting on balance sheets for quite a while now. So we do take that into consideration as we look to make our credit decisions. And we have, it's not on the slide, but we also have what we call, it's called the EDC Select Credit Insurance, which is a program that allows you to insure one buyer at a time rather than insuring your entire book of receivables. Traditionally, or in non-crisis time, that program is capped at receivables up to $500,000. We've expanded that upper limit to $1 million now, giving you greater flexibility in terms of being able to insure those single buyers. Next slide. Our guarantee programs outside of the business credit, the lines of credit guarantees through BCAP, we have our foreign exchange facility guarantee as well as our account performance security guarantee. And all of these working capital guarantees are designed to help you access more liquidity by freeing up existing credit capacity that you have with your current financial institution. For both of these things, typically, for a foreign exchange program, you'll have to post some form of collateral with your institution to secure up your foreign exchange lines. What our guarantee does is replace that collateral requirement to give you greater access to the credit available or the asset that you currently have pledged. And same with the account performance security guarantees. This is where we back up bank instruments, whether they be supplier bonds, post bonds, bid bonds, those sort of things, to really kind of free up that cash flow and get you access to the credit that you currently have. Both of these programs are available through your account manager or through EDC directly, and both are eligible for fee deferrals should you request that at this time. So it's just a conversation with your account manager to start instigating that process. Next slide. So the advanced payment insurance, essentially what this is, it provides insurance for any advanced payments that you make for the purchase of capital or quasi-capital goods when your supplier can't fulfill that obligation or they can't return the advanced payment that you have made. In these instances, how the insurance works is that we would cover 90% of your financial loss, total financial loss up to that piece. And so we've adjusted that so that the big change here for us is that up until September 30th of 2020, if you are one of these organizations that have started manufacturing PPE equipment or other COVID-related medical supplies, and you are required to post advance payments or supplier bonds, give us a call and talk to us because it's a product that's a great benefit to you and to enable you to be able to have peace of mind putting up those new instruments to bring on this new line of business. And that really wraps it up for me. As I said, the next slide has some general information for us. If you are an EDC customer, the best line of sight is to go to your EDC account manager. And for any of the new programs, whether it be CEBA, the BCAP guarantee, and the mid-market guarantee, please talk directly with your financial institution because they are the ones that are going to walk you through that process and getting access to those programs. And that's it for me. So I'll pass it back to Corinne.
Thank you, Glenn. I appreciate that. Again, more questions coming in, so we're going to have a nice little Q&A period afterwards. Before we get to that, though, we'll have our final presentation from Laura Henry. Take it away, Laura.
Awesome. Hello, everyone, and thank you, Corinne. And big thanks to CFIB for hosting this webinar. This is such important topics at this time. Certainly, CFIB is such a valued and long-term partner for Scotiabank, and I am always so impressed with everything that you do to support Canadian businesses, so thank you. We'll go to the next slide. Just a word on Scotiabank before we jump into the presentation. Scotiabank's purpose can really be encapsulated in 3 words: for every future. And that really continues to be our guiding light as we help our customers, the families, and communities achieve success through a full suite of advice and banking solutions. Certainly something that has never been more important than it is today. I'm also very, very proud that despite the challenges and uncertainty over the past few months, we were able to keep almost 97% of our branches open across the country. And we were able to do that with a top priority of keeping our customers and our employees safe. To all of our customers on the line, thank you so much for your business. We want to hear from you. If we haven't spoken to you, we've spoken to so many of our customers over the past couple of months, but if we haven't connected with you yet, please reach out. We are here if you need us. So jumping in, today's call is all about financial relief options. I'm going to profile 3 specific things. Before I do, I just will qualify one thing. Canadian businesses, as we all know, come in all sizes and levels of complexity. For today, I'm going to focus on what we'll call small business. So a lot of what I talk about will really apply to customers that have probably less than $2 million in revenue. If you're larger or more complex than that, there may be some different options available to you. Today, I'm going to touch on 3 things. One is the Scotiabank relief measures, but that's really about payment deferrals. Also going to give you some good details on Canada Emergency Business Account, or CEBA, which Glenn mentioned, as well as the co-lending term loan available in partnership with BDC, which Michelle mentioned. Let's jump in. Now, I can only speak to Scotiabank's program specifically, but many financial institutions do have some form of payment relief options available. So if you're not a Scotiabank customer, check with your bank or credit union to discuss the options. But at the end of the day, payment deferral is really just skipping your principal and or interest payment on a loan. In our case, customers with scheduled debt repayment who are experiencing hardship due to COVID-19 may be eligible for temporary deferrals, either personally or on the business side. So you can check our COVID-19 page on scotiabank.com for full details if you're a Scotiabank customer. But as I said, your own bank probably has similar programs available. On the business side, many of our small business customers are eligible for 3 months of principal payment deferrals on term loans. So that just means you're going to pay your interest and you'll skip your principal payment. But you can also skip up to 3 months of minimum payments on business credit cards. So you're deferring both principal and interest in that case. Principal deferrals are a really good option for anybody who is really struggling with cash flow. You are far better to work with your bank to defer a payment than you are to miss a payment. So I really encourage you to have open conversations with your bank about your individual situation, because there may also be some other support options available, even up to restructuring your loans. So I'll speak for Scotiabank when I say we absolutely want to talk to you and we want to work with you. A couple of other quick notes when you think about payment deferrals. Scotiabank and a number of the other banks do have decreased interest rates on credit cards for both personal and business while the deferrals are in place. And deferred payments are not reported to the credit bureaus as missed payments. So that's an important thing to keep in mind. We're going to spend some time on the next slide talking about Canada Emergency Business Account, or CEBA. I'm going to get into a little bit of detail here. This is certainly one of the things that's top of mind for a lot of our customers and something we get quite a few questions on. And you know what? I really like this program. CEBA is simple, it's flexible, and it's designed to help Canadian business and not-for-profits get access to capital to get through the current challenges. As Glenn mentioned, CEBA is delivered in partnership with EDC. It's available at over 230 financial institutions in Canada, certainly including Scotiabank. My comments here today should apply pretty broadly. This, of course, is money that's coming from the federal government that is administered by the banks. So the terms, conditions, eligibility will be pretty consistent across the board. For many customers, this is just a simple online application. So it's not an involved credit loan documentation process. It's really quite simple. I've heard from a number of our customers that they've gone through our process in probably less than 5 minutes. The purpose of CEBA is to pay non-deferrable operating expenses. You can only apply once, and you must apply through your primary bank. As you can see on the slide, CEBA provides access to its $40,000 loan, and it has no interest and no required payments until the end of December 2022. Some great features: if you have repaid $30,000 of that $40,000 by the end of December 2022, $10,000 of the CEBA loan will be forgiven. If you haven't repaid by that point, interest will begin to be charged at 5%, and the full balance must be repaid no later than the end of December 2025, which is pretty much 4.5 years from now. I want to spend a little time talking about eligibility, and this is something I've been very impressed, because this is something that has evolved over the last couple of months based on the voices and needs of Canadians. So I'm going to give highlights of 2 things. One, I'm going to talk about the current eligibility, as well as I'm going to give you a little teaser on an announcement that was made on May 19th, and those changes will be implemented soon. I don't have an exact date on it, but they are coming soon. I do recommend that you bookmark it and check out your Bank of Canada CEBA website for full eligibility and exclusions, and keep an eye on that because that's going to continue to be up to date with changes, as well as your own bank or financial institution's website. So on the eligibility front, today you are eligible if, and the key one is, if you have payroll expenses in 2019 that were between $20,000 and $1,500,000, you may very well be eligible for CEBA. For most of you, that number is going to be on box 14 of your 2019 T4 sum form. So payroll between $20,000 and $1,500,000. There are a number of other requirements, such as you must be a Canadian operating business that was operating on March 1st, 2020. You must have a federal tax registration, and you must have an active business checking or operating account that was open prior to March 1st, 2020. And there's a number of other smaller exclusions. Check out the websites, but those are the big ones. Now, on May 19th, the federal government announced an expansion of CEBA, and that will actually likely impact quite a few people on the line. And I'm quite excited about this one because I think it'll be a real win for a lot of our sole proprietorships. We don't have full and final details, but if you don't qualify under the $20,000 in payroll for 2019, so if you had less than that, as many as our sole proprietors do, you may be eligible if you have eligible non-deferrable expenses between $40,000 and $1,500,000. You'll also need to have a CRA business number and have filed taxes in either 2018 or 2019. Now, as I said, there may be some other requirements, exclusions or steps needed as the final program is launched, but I'm very, very encouraged by this announcement. Last thought on CEBA before we move on. If you have been impacted by COVID-19 from a financial perspective, I really do recommend you take a hard look. Certainly, and as Michelle and Glenn said, take a hard look at your financial picture, do some projections, understand what your cash flow needs are going to be and what your cash flow gaps are going to be. And if you are eligible, take a look at CEBA and see if this is a fit for you. It really has been designed as a great first step for many businesses who do need some capital during these difficult times. We're going to move on to the next slide. And just going to give you, again, a few details on the BDC co-lending term loan. This program, as mentioned, is in partnership with BDC, and similar to CEBA, it is accessed through your primary bank. Now, there will be some differences in the terms and conditions from bank to bank, but I'm going to talk pretty high level so that you can get a sense of what might be applicable for you. Now, this program is a longer-term injection of funds, and it provides access to working capital for eligible businesses that have been impacted, and it's really almost more of a bridge for operating expenses like payroll, rent, utilities, taxes, and other fixed costs. Now, when you look at this particular one compared to CEBA, this one's going to look a little and feel a little bit more like a traditional term loan, as it does have regular repayment. It carries an interest rate from the date of advance, and it is subject to a standard loan application and adjudication process. The available amounts are not prescribed, but they can be higher than CEBA. So if you have revenue of less than $1 million, the maximum amount available is $312,500. If you have revenue of more than $1 million, higher limits may be available. Amortizations will vary based on a number of factors, but for most of our small business customers, amortizations are around 10 years and with interest only for the first 12 months. The great thing is that with something like the BDC co-lending, these programs can be layered. So you can take advantage of CEBA, you can look at payment deferrals, you can look at some of the other government relief options, and certainly this one can come into play as well. There is a time limit though. This facility will be available until September 30th of this year. So if you are thinking of it, I would probably have a conversation with your financial institution sooner rather than later. Keep in mind that September 30th date would be you would need to have applied, been approved, and signed back any offer to proceed. Finally, I'm just going to briefly touch on a few resources that are available. If we can jump to the next slide. You can find additional information about all the programs that I've talked to from a Scotiabank perspective on our COVID page on scotiabank.com. We also have a business planning tool, and if you see it right next to it is a cash flow planning tool. And again, I really strongly recommend that you, even if it's the back of an envelope, take advantage of something, but really look at what your cash flow gaps are and your needs are over the next 3, 6, 12 months. That's really the best place to start as you establish, trying to determine what the best options are for you. We also have a couple of other resources that I'll mention. For women entrepreneurs, we do have Scotiabank Women's Initiative. It's got some great podcasts and other resources that are available there. And certainly our contact information is there. Don't hesitate to reach out if you have questions for us. Corinne, that is it for me.
Great. Thank you, Laura. And thank you all the panelists. Just before we go to questions, if we could just go to the next slide very quickly. I just wanted to remind folks on the call that, of course, we're talking mostly about the bank-initiated types of programs, but that there are other financial assistance out there. This is just a bit of a summary of what those other ones might be. If you have questions about some of these other ones, and some of you have had questions, and I've been trying to answer them as we've been going through this on some of these other initiatives, feel free to also contact CFIB, and we will, of course, be happy to answer any questions on things like the wage subsidy or the rent assistance programs, for example, which I know are two hot ones at the moment. But I didn't want to sort of leave this without saying that there are other programs that may also be helpful for businesses that are out there that we'll be happy to answer questions on if you just call us at CFIB. Or you're welcome to join one of our weekly webinars where we do lots of those kinds of questions. We have 2 of them tomorrow set up. So we move to the next slide, just a final reminder of how you can access CFIB. That's where you can, if you do have those questions, please do. And we will move on to general questions now for the panelists if they're ready. So as I said, quite a few questions coming in, and I'm hoping that we'll be able to give some answers to folks as we go through them. The first one I wanted to ask about, I'm just going to try and quickly scroll down here to find it, is from Karen. Karen asked, what is the updated status of CEBA? The PM announced some changes were being considered May 19th. I'm referring specifically to sole proprietors who do not have a formal payroll or dividends. So maybe I can turn that over to you, Laura, or to Glenn.
Absolutely. And Karen, I wish I had a specific answer for you. We don't have a date yet, but I know we're getting really, really close. I know everyone is working very, very hard to operationalize those changes and get them available to you. Glenn, I don't know if you have an update beyond that.
As I said, it really is a bank program. We're just the order taker on that instant, so I don't have any insights at all as to what's coming.
Stay tuned. My understanding is we're getting pretty close, but I don't have a date yet. I would recommend that you keep checking on your financial institution's website, or even speak to your account manager or your branch manager, because I'm sure they will know when it does come out and they'll be able to let you know.
Great, thanks, Laura. Karen had a second question I'm going to jump into, and it's actually for BDC, for you, Michelle. It says, how does a BDC small business loan up to $100,000 operate? Online only? Who is able to apply? And what sort of parameters are needed in terms of personal credit score? Oh, sorry, that was it. Who is able to apply? My apologies. So how does the BDC small business loan up to $100,000 operate? Online only, and who is able to apply?
So yes, we ask people to apply online. The eligibility is quite broad, and basically the credit will be adjudicated based on historical credit score of the applicant or the shareholders of the applicant business. So it's relatively straightforward. We've also, I must say, increased our risk appetite as it relates to this particular program to make sure we were able to cover a broader set of businesses and providing a lower interest rate as well.
Great, thank you, Michelle. Steve has a question. He says, do all EDC and BDC programs require personal guarantees? I don't know which of you want to manage that one. Maybe both.
I can start. I would say each application will be treated differently. Now at the smaller end of the market, where we're talking about, for instance, online financing, there's no other security that we will be taking beyond just a personal guarantee from the applicant. And this is meant to keep things simple. If you move towards larger commitments, larger amounts, and depending on the availability of security and the overall business, then there may be different percentages of being applied, and in some cases, no personal guarantees. But again, on the larger businesses, each situation will have to be assessed individually.
And it's the same hold true for EDC. It's a bit of the same adjudication, and the security requirements are going to really match the situation and the program of service that's being accessed. So some will,
Great.
some won't.
Yeah, and I may extend that. I suspect that Scotiabank would have a similar answer to that, right, Laura? Because I know this is coming up a lot lately, that there's been, and I'll just share what we hear anecdotally also from a lot of our members on the phones around this, is that there's often personal guarantees being asked when it comes to the CEBA loan, for example, as well. And I think there's concern, of course, that if things don't go as well as you'd hoped, that you may end up also having to, give up bankruptcy personally and not just your business. So I think that's a bit of a barrier for many small business owners who may otherwise take advantage of these programs. That's why I think some of these questions are coming from, just to give you some context of what we hear around the personal guarantee.
Thank you, that's helpful. I will say for CEBA, for CEBA per se, there is no personal guarantee, there's no security. Where the only way that might come up is for a sole proprietorship. You are the business, right? So you are taking it more or less in your personal name. But if you do have a corporation, there is no personal guarantee for CEBA.
Okay, excellent. Well, thank you. That helps clarify things a little bit for sure. Stephanie is asking, many COVID relief programs have required a pre-existing business banking account, which many sole proprietors do not have. Where do sole proprietors stand with the ability to access these programs? Obviously, we'll talk about CEBA in this context. I don't know who wants to take that one.
It's Laura, I can jump in. I'm going to answer that on a couple of levels. For CEBA in its current iteration and the current eligibility, you are required to have an active business account as of March 1st, 2020. I will say, if you were to read the May 19th federal government announcement around the expansion of CEBA, one of the things that they do indicate that they're looking at is trying to understand how to deal with businesses who do operate their business out of their personal accounts. So we haven't actually seen any changes on that front, but we can take some comfort in that it is being looked at. So again, my recommendation is really kind of bookmark that CEBA, the Government of Canada CEBA website, or certainly your financial institutions. I know if you happen to be a customer of Scotiabank, talk to your small business advisor or manager, because I know this comes up a lot. They will absolutely know when it changes.
Great. Thank you, Laura. John is asking, what sort of parameters are needed in terms of personal credit score to qualify for these programs? He's specifically asking about BDC or BCAP. Over to you, maybe Michelle first, and then Glenn.
Yeah, well, again, this will depend on each individual situation, but just in practical terms, if you have a relatively good credit history, then accessibility to capital will be made available. But it's difficult to comment on an individual situation, as for instance, your beacon score in Equifax is set on a number of factors on past behaviors. But relatively speaking, I'd say average Canadians would have access to the financing. So that's the generality of the answer I can provide right
now. Great. Anything to add, Glenn?
No, nothing to add. I mean, I agree with Michelle in his comments. For the BCAP guarantee program, though, that program is very much administered by the financial institution, and so it is up to each individual financial institution's own credit adjudication practices. So, how they want to manage that is between the bank and the bank's customer. And so, we very much have just painted the box and given the banks a box to operate within, and it's up to them and how they want to operationalize that or manage the credit adjudication process.
Thank you. So Elaine is asking, she says, we've been hearing rumors that the $40,000, I guess the CEBA loan, that's what she's referring to, comes with restrictions on what you can use the money for. We were warned to keep track of what the money was used for. They, in quotes, she says, say if you end up not really needing the loan, you'll have to pay it all back, even if you're doing it early. All rumors between businesses. Is there any truth here? Maybe Laura, is that something you could address, or Glenn?
Yeah, Yeah, for sure. I'm happy to take a step, and Glenn, feel free to jump in. So for CEBA, it is for businesses who have been impacted by COVID, and it is to pay non-deferrable expenses. So yeah, I would absolutely recommend that you take a look at your personal situation, you inventory your expenses, and understand your eligibility from that perspective. If we want to talk about what non-deferrable expenses are, check the government CEBA website for a list of them. But those are things like rent, property taxes, utilities, insurance, and debt repayment.
Great, thanks, Laura. In fact, you just answered questions from a couple other folks who were asking around the non-deferrable expenses and what was included. As well, one question was also from Robert. I'm a retail store. I need to know if my retail inventory would be considered as an eligible expense. And I think that's one that we're not sure of quite yet, is my understanding. Is that correct, Laura?
Yes, that one I'm not sure of. And when it comes to the CEBA expansion, I am hoping that because it is specific to non-deferrable expenses, we are hoping that there's going to be a little bit more of an exhaustive list on that one. But yes, I'm not sure on inventory.
Great, thank you very much. So again, we've had a few questions here from folks who I think have struggled to get financing from the banks. One gentleman talks about having a poor credit history and asking why banks or BDC are not loosening their restrictions given the COVID-19 issues. There was another one also, she was sort of in the opposite, where she had expanded her business in many ways over the last little while, but as a result was a little more cash poor, and then COVID hit, but is not able now to get loans. And I guess the question for this group is, what do those kinds of businesses do that are sort of struggling right now to get any kind of, lending from a bank at the moment, but are still in need of it and find themselves in a situation that's through no fault of their own? I don't know if you have any advice to provide to those kinds of businesses. Anybody?
Or I can take I can take a little bit of a stab at that. I think it's absolutely terrible times for so many of our customers, and you're absolutely right, Corinne. Absolutely no fault of their own. What I would recommend to businesses today, if you are in that, whether you are, the second example where you just started to expand and then all of this hit, or whether you were struggling a little bit as you go. I would really start with that inventory and understanding, what is your position today? What does your position look like over the next, 3, 6, 9, 12 months? I know we don't have crystal balls, but, do a best case, a worst case, and a kind of, I hope this is the case scenarios, and really understand what your gap is. And then at that point, I would really look at the relief options available. So whether it's a CEBA or loan deferrals or some of the EDC and BDC programs, really kind of just inventory and see what's available. The good news is for some of our customers, a lot of those sole proprietorships, the CEBA expansion may be just, the lifeline that they need. When it comes to, there's a very small number of our customers who actually are thriving in this current environment. I will say from a credit standpoint, we absolutely are still open for business, but, just like, we would do any other day, we do have to look at the customer's full financial situation and their short-term and long-term profitability and ability to repay the debt. So if it's normal type of lending, we're going to look at those things. But right now, there is an opportunity for some of these relief programs that can really bridge that gap for them from a cash flow standpoint. And that's where I'd recommend that they start.
Great.
And Corinne, maybe just to add, obviously, the cheapest source of funding for any business is the revenue they generate themselves. So, and this is a challenge in the current context, but and this links back to proper cash flow management. So, what can you do to kind of accelerate some of the inflows that you'll be getting? Even providing some discounts to some of your clients. That's one strategy. On the other hand, reducing the pressure on the outflows. So, I know there's a lot of suppliers, a lot of tenants that have been, very accommodating in the current. So, try to renegotiate some of your obligations that you have right now to limit some of the outflows. Thirdly, there's other sources of capital beyond what the banks offer and what BDC offers. Namely, there's opportunities through some of the fintech companies you can apply online. Now, obviously, you'll pay higher interest rates for this, but if that's the only way to kind of get access to external funding, there are some alternative source of funding. And also there's always private capital or family friends. But each situation is challenging. But I'd say right now, the best strategy is to limit the need for external financing. And if you're not able to get external financing in traditional manners, there are some alternatives.
Great. Thank you, Michelle. I'm going to squeeze in a few more questions because there's just so many of them here. A couple of them is to just clarify. One was for you, Laura. The question was, hi, Laura just mentioned expansion of CEBA loan to company with non-deferrable expenses between 40,000 and question mark. What's the upper limit?
$1.5 million.
Great, thank you. So 1.5 million, Josephine, that's what the upper limit is. And I have one here from Nicole. Are EDC loans or programs only available for businesses in Ontario? Glenn, I figured you may want to clarify that. Glenn?
Yep.
Did you hear the question?
I didn't hear the first one. Which programs?
Sorry, are EDC loans or programs only available for businesses in Ontario? Is the question from Nicole.
No, they're available across the country for any Canadian exporter, or if they're BCAP related or COVID related, any Canadian company can access all of EDC's services to date.
Great. Just wanted to make sure you had a chance to clarify that, so people who understood nationwide organization. I'm going to just add one more in here, and then I'll shut it down. So Mark wanted to know, he started his business in the fall of 2018. He's the only employee of the business, and during 2019, he did not take a salary. Instead, he put all the earnings back into the business. He's now been told that he doesn't qualify for CEBA because he didn't pay himself a salary in 2019. And he wants to know if this is true, and are there circumstances which would allow him to qualify for CEBA? So maybe that's back to you, Laura.
I'm happy to take that one. So the requirement, the current requirement under CEBA, if you were to apply today, is you do need payroll. So that was T4 paid payroll between 20,000 and $1.5 million. So if you did not pay yourself a salary and get a T4 and you're the only employee, then you wouldn't qualify today. The good news is that May 19th announcement by the federal government to expand CEBA, you may be eligible. So stay tuned on that one, but that one will have an exception. So if you don't meet the 20,000 payroll criteria, you might be eligible if you have non-deferrable expenses between 40,000 and $1.5 million. So if you look at your business and you had rent and property tax and insurance and maybe some debt repayment that would hit that $40,000 level, you may be eligible. So again, I recommend you kind of follow that Government of Canada CEBA website or check with your bank to see what the final requirements and steps are around that, but you very well may be eligible in the future.
Great. Okay, I'm going to squeeze one more in, and it's more just so everybody can think about this. Sharon had a quick question about many businesses have to pay out for PPE, personal protective equipment, and will those costs be considered as non-deferrable? I will respond to that, Karen. I think they should be, and it'll be something that we'll obviously push for, but I suspect that it's one of those things we don't know for sure about at this point, but it would make sense that it would be considered a non-deferrable expense. Any other comments on that? If not hearing any, I'm going to bring this to a close. Before I do, though, I want to ask each of our panelists if they have any final words they'd like to share before we shut down. Maybe I'll start with you, Michelle. Any final comments?
Thanks again, Corinne. Thanks for the invitation, and thanks for your members for being on the call. BDC.ca, if you need more information, then please reach out to us. We'll try to help as much as we can.
Thank you, Michelle. Glenn, anything you'd like to share?
Yeah, just again to thank CFIB for the opportunity, and please reach out, edc.ca, or our trade advisors who are contact information in the presentation provided. And please do reach out, and I wish you guys all the best.
Thank you, Glenn. Laura, any last words?
You know what, just Corinne, thank you for this forum, and to all the businesses out there. You know, really inventory where you are and what you need. Consider things like CEBA, and absolutely, you know, be transparent with your bank. If you're a Scotiabank customer, reach out and talk to your business advisor. We're here to help.
Thank you, Laura. And I just wanted to say thank you to all the panelists for joining us today. I do want to apologize. We were not able to get to everybody's question. If we were not able to answer your question, I encourage you to call CFIB 1-88234-2232 or any of the organizations. Their contact information is here today. So we really appreciate you being here. We know this is a very challenging time for you. Please know that CFIB and these organizations are here to help. So please reach out and we'll do whatever we can to help you through this, this difficult period. Thank you again for joining us. And with that, we will shut down the webinar.